What if the entire financial system was designed not for your success but for your silent surrender? Governments and central banks project an image of stability, but history reveals a disturbing pattern: sophisticated traps that drain the wealth of ordinary people. These aren't accidents. They are recycled strategies with one purpose: to move resources from the bottom to the top. Let's begin with the most ancient tool: currency debasement. When a state spends too much, it can artificially expand the money supply, reducing the purchasing power of every unit of currency in your pocket. The Roman Empire mastered this. Emperors reduced the silver in their coins until they were just copper with a silver wash. Your savings were silently stolen by the state. Prices spiraled and savings evaporated. This invisible tax is not a relic. It's a core policy of modern central banking. Then came the coerced loan. Medieval kings request money from merchants. Refusal meant ruin. Repayment often never came. The trick was framing coercion as civic duty. The birth of the modern central bank institutionalized this transfer. When England created the Bank of England, the wealthy bought government bonds funded by taxes on the poor. The system is designed to protect itself, not you. Now, examine modern tricks. Deficit spending funds corporate welfare and bailouts, but the public shoulders the burden through higher taxes and inflation. Bailouts socialize losses and privatize gains. The public is told it's necessary to save the economy. Even state pensions are a generational chain letter. Governments spend the cash immediately and leave IOUs, forcing reforms like lower benefits later. The consistent thread? Controlling the narrative. Inflation is called growth, and bailouts are stability. The language obscures a continuous flow of wealth from the many to the few. This works because most people don't understand financial history. Today, tricks are more complex. Quantitative easing created money to buy assets, exploding stock and real estate values. Who holds those assets? The wealthy. For the average family, gains were negligible, but costs of living rose. The hidden tax of inflation is a core feature. When prices rise faster than your income, it's a covert tax on your standard of living. Regulatory capture lets powerful corporations write their own rules. The public sees a watchdog. The initiated see a partner. Why does this matter now? These mechanisms are intensifying. Inflation gnaws at your savings, and debt balloons. The outcome is a system designed to keep you on a treadmill while a financial elite accumulates power. The majority never break free because they don't see the game as rigged. They accept inflation as natural and taxes as inevitable. That lack of awareness is the ultimate control. Understanding finance is a form of defiance. Knowing history is your shield. So what can you do? First, always question the surface narrative. When a government announces stimulus, ask who profits first. Second, build genuine wealth in assets outside this manipulated system. Third, never blindly trust that the system has your best interests at heart. The same financial strategies that impoverished Roman citizens are draining your vitality today. Cloaked in modern language, the only thing that changes is your ability to see them. If this shifted your perspective, please hit the like button and subscribe to Winds of Thought. The past holds the clues to your financial future.